Following up on one of the most important promises from the campaign trail, U.S. President Donald Trump has released a tax plan that proposes to sharply slash business taxes and steeply discount the rate on corporate profits brought back into the U.S. Touted as the biggest tax cut in U.S. history, this reform is causing heated discussions in the U.S. and around the world. Today, to discuss Trump's tax cut proposal and its potential influence, I'm happy to be joined by He Wei-wen, Senior Fellow at the Chongyang Institute and Center for China and Globalization, and Charles Liu, founder of How Capital. That's our topic. This is Dialogue. I'm Yang Rui. But before we start the discussion, let's take a look at this.
It's a vibrant, competitive business culture. But the United States has one of the highest corporate income tax rates in the world, 35%. The Trump administration wants to reduce it to 15%.
We have a once-in-a-generation opportunity to do something really big. President Trump has made tax reform a priority, and we have a Republican Congress that wants to get it done.
Another goal to lure U.S. corporations holding around $2.5 trillion of profits overseas to bring it back, using a much-reduced one-off tax. Personal income tax rates would also be reduced by increasing the standard deduction to benefit low and middle income taxpayers.
This plan is going to lower the debt to GDP. The economic plan under Trump will grow the economy and will create massive amounts of revenues, trillions of dollars in additional revenues.
Critics, including many Democrats, say economic studies demonstrate that this theory about stimulative tax cuts actually raising revenues isn't borne out in practice.
What we've seen with now more than 30 years of evidence over that period is that tax cuts can provide a small boost to the economy in the short term, but it really doesn't last and it really doesn't change the game.
At a time when U.S. public debt exceeds the country's total annual GDP, the White House says it will eliminate many current tax deductions to raise additional revenues and simplify a hugely complex system. The Trump administration has now begun the intensive process of negotiating the crucial details of this plan with Congress while attempting to balance out the competing interests of different segments of the business community. Daniel Renches, CGTN, Washington.
Gentlemen, first of all, let's take a look at the specific tax reform principle laid out by the White House. And now, President Donald Trump's administration has rolled out a tax plan that proposes to slash corporate taxes, tweak personal tax rates, and eliminate most deductions used by wealthy Americans. Do you think this is a shot in the arm that may amount to what becomes a self-fulfilling prophecy?
I think, first of all, it's not a plan. It's a one-page statement of principles. It's really far from a real plan. The tax code is thousands of pages with a lot of details. It's 10 times more complicated than Obamacare. And if Obamacare doesn't get through Congress, I don't think this has any chance of reaching actual decision or realization. You have to note the timing of the issuance of this paper of principles. It is 4 days before his reaching his 100-day mark. There were quite a bit of talk about how he hasn't really achieved very much in the first 100 days. So at the last minute, they talk about bringing Obamacare back again and a grand tax plan. So I think this is more for public consumption, that I'm actually doing something, than counting on this to actually go through.
Palatable, entertaining, and jubilation for consumers. I don't know whether the middle class will be very happy about this page of principles, but what are your thoughts, Wei-wen?
Yes, I quite agree with Charles. In my understanding, this is not a serious plan. Rather, it's a card for bargaining with the Congress. So in other words, it's too young and too simple to make a professional comments. But anyway, in general, tax cut benefit the corporations for investment and also benefit the individuals for consumption. However, this, if really follows that line, not all the people will benefit. The rich people will benefit the most.
In fact, we should have invited a representative from AmCham, an interest business community in China, to defend interests of American companies. Now, for transnational companies, this new plan also mentions a territorial tax system to level the playing field for American companies and a one-time tax on trillions of dollars held overseas. Will this help to attract overseas investment and keep American companies staying in the United States, creating jobs?
It's much more complicated than whether or not you can have tax rates which makes it more productive to invest in the U.S. It's much more complicated than that. You now basically have a global supply chain. You have a new set of markets as well. For example, China has become a much more significant market than it was 10 years ago. So decisions to invest, tax is just one element, and there are so many other elements. For example, easy access to markets is probably even more important than the tax rate. Or the tax rate fights in Europe, for example, with Ireland and so on, very, very low corporate tax. But even that is being levelized because other countries are not very happy about the low taxes in Ireland in grabbing corporate headquarters. But the business is done elsewhere. It's not done in Ireland. So I think too much focus on the tax rate or bringing the profits back to the U.S. Is really not really where we should be looking at. The global supply chain, the globalization of the economy is much more complex than that one element.
What do you think of the shock therapy? For example, it's a corporate tax rate of 15%. Well, such a rate would deliver on Trump's campaign promise.
Yes. Actually, the actual U.S. corporate tax rate is not as high as the nominal tax because there are numerous cuts or privileges in different states.
Loopholes.
Yes. So if we say the 15% flat is very low indeed. However, whether it will generate more investment, we have to watch and see. Because only about 10 years ago, when George W. Bush was president, he adopted a similar policy. And then some of the profit returned back to the U.S., but they did not return to investment. They returned to the stock market, only prop up the stock market, not a real investment growth.
And do you think this tax package sounds like a return of the Reagan economics? In 1986, the Tax Reform Act of the Reagan administration did impress the media and wowed the rest of the world.
I think you have a very different situation here. Number one is the amount of debt held by the federal government, or the debt of the federal government. And even now, you're looking at several trillion on the balance sheet of the Federal Reserve. Ultimately, this is all a future burden of future generations of Americans, all of which. Now, to cut taxes without generating savings elsewhere, I don't think it's going to fly in Congress. So I think compared to then, where the total GDP, I don't remember the number, debt to GDP during the Reagan era is nothing compared to what it is today. So you really can't compare the two situations. I think your point, Professor He's point about the fact that 15% is a flat tax, and actually this is what I was thinking about, the 3,000 some pages of tax codes are all loopholes for special interest groups. And whether or not you actually get the special interest group to go along with the changes in the structure is hard to say.
Well, in fact, it's been a common practice for lawyers to help the wealthy evade taxes. Now, we don't have to go so far back to the Reagan administration. In fact, when President George W. Bush enacted a repatriation tax at a 5.25% rate in 2004, but studies show clearly that money brought back mostly went to stock buybacks and dividends
Right.
rather than
Right.
hiring workers.
Exactly.
Correct.
Exactly.
So the tax cut itself does not necessarily lead to increased investment. The increase of investment depends on the market, on economic prospect, and on the future of the corporate itself. So as Buffett once said, that the decision for increasing investment depends not on tax, but on the prospect.
Exactly. This is the point that I was trying to make. Decision on investment involves so many issues.
Yes.
And access to market, demand, and also efficiency, productivity, involves all of these factors. What we saw with George W. Bush's bringing back, over 80%, I think by one figure, by one study, it was over 90% of the funds brought back were dividends and stock buyback.
Elimination of the estate tax, namely, this would eliminate a tax on assets being transferred through a will. Will that be a blessing for the super rich guys?
Definitely. Because Donald Trump himself is a rich man. He works for the rich. That's for sure.
You guys
for instance,
are bashing this
he
president
will
ruthlessly.
abolish the inheritance tax, which is huge. And
As-
also he will scrap AMT, that's alternate minimum tax.
Right.
But in the case of himself, we only have the data for 2005, that's more than 10 years ago. He paid AMT for $31 million, but if that was abolished, he would have only paid $7 million. So that's very good for himself, for the rich.
That's
And it's
why.
actually, there are social issues here, because it means one of the things about estate tax or inheritance tax is to prevent the over polarization of society into the super rich and the poor. In other words, the estate tax is supposed to bring down the next generation's wealth, and so that there could be a more equalization of income and revenues and living standards overall. If you take that away, the social implication is the rich gets richer, the rich retains their position of power and influence over generations, and the poor finds it very difficult to come up.
Given the severity of your scathing criticism against Donald Trump, we can easily understand why he's absent from the annual event of meeting the press. A Muslim comedian was pouring scorns on this president about the freedom of the media. Now, that's a different story. Elimination of itemized tax deductions other than charitable donations and mortgage payments. One of his senior assistants, in fact, the representative of the Economic Council, Presidential Economic Council, said this provision, Mr. Mushin said this provision would close loopholes and offset the decrease in base tax rate for high-income Americans. What do you think of the ring of truth, if any?
Well, actually, if all of these deductions are taken, and you can certainly have a lower tax rate if it's a flat tax rate, and if you take away all the deductions, but you know, the deductions involves special interests. Even the fact that lawyers and accountants who handle these deductions constitute a major force. This is their business. This is how they make a living. So I think the resistance is going to be very substantial to take away the itemized deductions, because all the itemized deductions were passed through Congress for very specific special interest groups.
Thank you so much. You are watching Dialogue with Charles Liu and He Weiwen. We're discussing impact of this shock therapy, President Trump's recent sweeping tax reform plan. We'll be back in a short while. Stay with us, please. Well, anyone who listened carefully to his speeches or read his campaign material on the campaign trail should have noted that he was not proposing that the federal government should carry out the infrastructure investment, which is one of the pillar discourse to support his economic rejuvenation scheme. And President Trump was not calling for a Keynes fiscal stimulus based on deficit spending. Instead, Trump's campaign called for a deficit-neutral system of infrastructure tax credits to provide incentives for private businesses to undertake projects to build roads, bridges, tunnels, airports, and so on and so forth. Let's put aside the proposal that President Xi Jinping might come to his rescue later. We'll discuss that later on. But first of all, a second look at the comparison between maybe Ronald Reagan or JFK's, Franklin Roosevelt stimulus package of the 30s and 40s of last century, and what is happening today. Weiwen, what do you think of such a parallel comparison?
I think there are differences for Ronald Reagan and for even Franklin Roosevelt. They stress on the expenditure, expand expenditure at the cost of the increase in the federal budget deficit. But for Donald Trump, he does not do that. Rather, he cuts the income by tax cut. The result would be more or less the same. That's the expansion of deficit.
I would add one thing in addition to this aspect that Professor He talked about. There's another very important aspect is infrastructure takes a long time to pay back. Roads, airports, railways, and so on.
There's a huge amount of local debts here in China.
Right.
After years of boom in infrastructure building, you expect to have a long-term return.
Right.
And the private businesses will not be that patient.
Exactly. Exactly. That's why I think his team, Steve Mnuchin or Robert Ross or Gary Cohen is probably less sanguine about this than the others. Their plan to do this in what is in China's case called PPP, private-public partnership, to do infrastructure will probably have very little takers from the private sector in the U.S. In the U.S., it's always been led by the government. For example, states that wanted to build interstate highways issue bonds, and the bonds are guaranteed by the state government from their revenues and their income. I don't see private sector willing to make investments that looks out at returning your investment over 25 years. It doesn't quite work that way in the capital market in the U.S.
But what do you think of the impact of the Chinese tax reform? Small and medium-sized enterprises in our country have been talking about when and how their financial burdens, I mean the burdens of taxes, should be eliminated, if not a reduction sharply.
I think in China we have more complicated issues. The heavy burdens, especially on small, medium, and micro business, include not only tax burden but also the financial burden. They borrow money from the banks at a much higher interest rate, which has nothing to do with the tax. So the government has to reform on different fronts, not only the tax reform, but also the financial reform.
President Xi Jinping recently hosted a central conference on how to prevent systematic financial risks. That may have covered issues ranging from online payment, shadow banking, to recent anti-corruption campaign in the state watchdog agencies, with someone being taken away as part of the current investigation into the rampant corruption. So what do you think of, the urgency of the Chinese authorities to undertake and undergo further tax reform here?
I think the tax reform for China, really, it's a financial reform. It's more than just tax reform, because the systemic risks which we see today are actually not the mom and pop shops, not the small investors, not the small guys, but it's very large, partially state-owned or some even privately owned organizations, financial institutions who play financial games in taking out big loans for, let's say, acquisitions abroad. A particular airline is now the biggest shareholder of Deutsche Bank, for example. It doesn't make any sense. And most of the money that was spent to buy the shares of Deutsche Bank came from loans. And there are systemic risks in big companies in China taking out far more than what their asset base should dictate in terms of loans.
So long as I'm concerned, a few years ago, to level the playing field between overseas multinationals and homegrown non-public sectors in particular, we were able to achieve a unified corporate income tax rate of 25% from 35% down and also 15% up. This is a middle ground that we were able to cover. What do you think of the growing sense of urgency after President Trump has announced this ambitious blueprint of tax reform? What do you think of the response, most likely response from the Chinese authorities to live up to the external competitions?
I think since we have the unified corporate tax, 25% applied to all the kind of business, including private, state-owned, or the foreign. So this is not a major issue. The issue should be something else. That be financial burdens or the environment, the competitive environment, whether there's a fair competition, whether there's all different financial risks behind the different kinds of business. I think in this regard, the shadow banking and also internet banking, internet finance entails much risks.
Despite the huge differences in domestic politics across the Pacific Ocean between China and the United States, the two governments actually share one thing. They want to spend more, but also have to cut taxes somehow to live up to the expectations of the SMEs or the state enterprises and the foreign players. Now, the same can be said about Trump. Trump is facing very much the same catch-22 situation. How could he possibly do the two things, get the job done simultaneously, to increase public spending and also to cut tax?
I don't think it's really up to him.
Will he end up having the default economy?
I don't think it's really up to him. Congress is the one that passes the budget and also allocates the money.
Yes. What do you think of? Yes, go ahead.
I don't think Congress is going to, given the diverse interest that is built into the Congress, I don't think they're going to accept spending a lot more using huge deficits. I don't think that will happen. And then also the capacity of the U.S. to spend more from borrowing is not as strong as it used to be because the amount of debt has already become quite significant. The governmental debt, well, actually it's more than that. Governmental debt, consumer debt, even student loans. Student loans have reached $1 trillion. All of this debt added together is quite significant.
Where does the fund come from for the building of infrastructure, which is, as I said earlier, a pillar policy to rejuvenate the U.S. economy?
The expenditure for infrastructure is not included in the tax reform. So in the eyes of Donald Trump, the government should pay no money. The private should do the job. But actually, that will not happen. It must be supported or backed by the government money.
You know, the outcome and deliverables, if any, coming out of the Mar-a-Lago summit in Florida recently has left many observers wondering aloud, what would be the crux issues or the most substantial part of the 100-day initiative put forward by President Xi Jinping to sort of please his American counterpart so that we would not come under huge pressure on the issue of Taiwan, the One China principle, or the DPRK, because we don't want that to happen. We want to somehow give us gifts to the United States and to repair, if not mend the ties, the fence between the two governments.
I think.
What's your hunch?
I think it's actually quite a bit more than that. For the Chinese side, the last couple of years, really for the first time in modern history, China has become a capital exporter. It used to be a capital importer for the longest time. China has become a capital exporter. So if you want to create jobs in America, if you would like to have additional investment, sure, we'll make more investments in the United States. The problem with investments in the United States so far has not been the unwillingness of China to invest, but the unwillingness of the U.S. government to accept Chinese investment. We've had
and
so
the
many
unwillingness to transfer high-tech products.
That's right.
To let us buy and
Technology.
purchase high-tech
Exactly.
firms.
Exactly. So if you're going to say, oh, please help us, sure, we'll help you, then you have to loosen up your control over Chinese investments over some time.
Everybody was talking about the launch of a second aircraft carrier by the Chinese Navy, but what about 11 similar strike groups by the United States and the huge, huge military expenditure? Jack Ma said in Davos, were you not, had you been able to save trillions and trillions of US dollars in the overseas military adventures, you could have built much of your infrastructure projects. Now, do you think Trump, who is also licking the wounds of the legacy left over by his predecessors, knows this clearly, that he would not turn to the use of military interventionism in the case of DPRK, and he would say, hey, President Xi Jinping, I like you. I like your 100-day gift. What would be that? So still one more question, Weiwen, your thoughts about the gift that President Xi Jinping may have given to his American counterpart to help stimulate the U.S. economy.
Yes, President Xi Jinping certainly talked to President Donald Trump that we should work together, cooperate, and to avoid conflict so as we can build not only our own economies, but also support and contribute to the world economic growth and the world peace. Of course, at the same, when Donald Trump says he appreciated very much President Xi Jinping, he will continue to do what he likes to do, that he will continue to expand the military expenditure to support the defense sector, which is an important base for his interest group. He will not change that. And also he has the philosophy that America, if wants to be strong, must be strong military in order to lead the world and to let other powers be afraid of the United States. That's his philosophy.
One more question about the infrastructure building in the United States. Most of the Chinese would say, with a strong mixed feeling, that it's going to be a mission impossible for the Trump administration and indeed for his successors in the future, because for at least one reason. The United States has been a democracy, a flagship democracy. If you want to demolish or dismantle houses, to lay groundwork for infrastructure building, you got to have years and years of a policy hearing, congressional hearing. You have the independent media.
And lawsuits.
And the lawsuits, endless litigation.
Yeah.
I mean, in India, for example, it's very difficult to argue with a farmer who refuses to relocate his property. You know, the media would support the disadvantaged social groups. So what about the United States? Is that just a vision, a blueprint of yet another political stuff?
You mean
in the United States, when it comes to the issue of infrastructure building, perhaps we should send an army of Chen Guan to the United States.
You know, I think this is the common occurrence. President Obama, during the initial year of his taking office, planned to launch massive infrastructure investments, but the Republicans blocked his plan in the Congress. But this time the Republicans, if not the Republicans, but Donald Trump, launched a similar plan. But differently, he does not ask the government to pay for that. Instead, he asked the private to do that. So that one might be easier to pass in the Congress. However,
yes, indeed, this is an uphill battle for President Trump, who has lost the battle on Obamacare and the ban on Muslim travelers. With that, we come to the end of this edition of Dialogue. Hope to see you pretty soon about the tax reform. Until then, goodbye.